Okay, without further ado, let's get started. So, hello everyone. Nice to see some familiar faces here watching. My name is Cheyenne, and I am a developer relations engineer here at the Sweet Foundation. Today we'll be going over the today we'll be going over the demo day for the Sui Liquid Staking Hackathon. So this has been cooking up for some time now, more than a month now. We had our check-in at our Singapore Builder House, I think last week or maybe 2 weeks ago now. And yeah, now is the time to bring all of the fruits of your labor to show. So I'll be bringing Henry on stage, also head of APAC here at the head of APAC developer relations here at the Sweet Foundation, and he'll do a little to introduce the hackathon. And after that, we'll just jump right into it. Henry, here.
Everyone. I'm just trying to share my slides really quick. Uh, I'm gonna give like a quick intro. All right, can you guys see my slides? All
Yes.
right, cool. Yeah, thank you, Cheyenne, for the introduction. So my name is Henry, and I'm a part of the APAC DevRel team for SUI. Um, So before we start, I want to give everyone here like a quick intro of what this hackathon is and how this demo day is going to run. Okay, so let's start. All right, so before we get into the kind of the more detailed information, I want to talk just really briefly about what our goals are and what our like ethos are for running these contests. So the overall goal um, for these like contests and hackathons is that we want to facilitate the deployment and also launching of high quality and long-term viable projects on Sui. And like I think this goal is going to be is especially important for this one, and you will see you will see how that works out once I kind of explain like what we're planning to do after this hackathon, how we're gonna bootstrap these projects. And then the underlying ethos of this is that we believe that openness and also competition will drive the most innovative and disruptive products to be built on Sui. All right, let's go to the next slide. Um, I kind of want to give like a quick overview of our schedule. So the first part is what I'm doing right now. It's just a quick intro of this hackathon, and then we will go into our first session. Our first session is going to be for the category of liquid seeking protocols, and there will be 7 teams in the first category. And then after the first session, there will be a break in between, where we'll also have our sponsors. Uh, Sponsors come and give their talks, and then after the break, we will have our second session, which is for LSDFi and tooling. And for that, we have 5 teams. Okay, let's see. Okay, and for each of these demos, each team will get 10 minutes, and then within those 10 minutes, the 5 minutes will be for the team to give their pitch and also their demo, and then followed by 5 minutes of Q&A time. And within this time, the teams are free to use any slides, videos, live demos, or any other formats. And then our time signals will be given for 2 minutes, 1 minute, and 10 seconds remaining. Okay. And then to kind of like briefly go over the prize pools, the prizes are different by category. So for the liquid staking protocol category, the prizes include we will evenly distribute 25 million SUI tokens of stake, and that will be distributed evenly among the top 3 teams. And then on top of that, we will also cover security audits of the smart contracts by OtterSec and MoveBit for the top 3 teams. And for the second category, LS-DeFi and tooling, the prizes, they are as follows. The first place will receive 5,000 K US worth of SUI tokens, and the second place will receive 30,000 K US worth of SUI tokens, and then third place will receive 20 K worth. And also the third type of prize we have is going to be for honorable mentions, and that will be 25K worth of US in SUI tokens, and that will be evenly distributed to all shortlisted teams who do not place within the top 3 of either category. So what that means is that every team that is here now is already in the money. So yeah. And then sorry. And then lastly, we have the ecosystem bounties. We have 5K bounty from Cetus, and an 8K bounty from Navi, and a 5K bounty from Scallop. All right, for the next part, I want to introduce our 3 demo day judges, and I will bring them onto stage to give a quick intro of themselves. Let's see. Let's do Alonso first. Hello, Alonso.
Hey everyone, it's good to be here. Really excited. I'm the chief economist at Miston Labs, and I'm really excited to see what people have built and for this demo day in general.
Thank you. And next, I will bring up Cynthia. Cynthia is over here.
Hi everyone, this is Cynthia. I'm really glad to be here and to be the judge for the demo day. Super excited to see what everyone is building. A quick introduction on myself. I'm with Sui Foundation, and I'm leading the ecosystem growth for the APAC region. And I'm working very closely with Henry for the region.
All right, thank you. All right, next we'll bring up Emma. Hey, Emma.
Hey everyone, good to be here. My name is Emma. I'm an engineer working on Sui at Miston Labs. I'm super excited to be here and see all the projects today.
All right, thank you, Emma. All right, let's go to the next part. And I also want to thank you to our 3 strategic sponsors, OtterSec, MoveBit, and Alibaba Cloud. And I think OtterSec and Alibaba Cloud will also be giving their sponsor talks during our break. All right, and also shout out to our ecosystem bounty sponsors, which are Scallop, Cetus, and Navi. All right. For the last part, I also want to remind all the teams to submit your questionnaires by September 30th, which is Saturday, noon time. So that time zone is going to be GMT plus 8. So it's about one day from now. Yeah. And lastly, also just best luck to all teams. All right. Thank you.
Sorry, I was muted. Thank you so much, Henry, for that introduction. So now, without further ado, let's jump right into our demo day participants. So up first, we have Aftermath Finance. So yeah, as Henry mentioned, there'll be 2 categories, the actual liquid staking protocol and the LSD-Fi and tooling demo. So now we'll be starting liquid staking sessions, the actual liquid staking protocol sessions. So up first, we have Aftermath Finance. So let me bring the team onto the stage here. Hey,
Alright.
Kevin, how are you doing?
Hey, I'm doing great. How are you doing?
Doing well. So let's jump right into it.
All right, sweet. Hello, everyone. My name is Kevin, and I'm the CTO and one of the co-founders of Aftermath Finance. And today I'm going to be discussing our liquid staking token, AFSWE. There's a lot to showcase here, so I'm just going to jump right in. So first, what are the goals behind AFSWE? So as is the driving force behind every liquid staking token, our main purpose is just to add fungibility to the native token that has been staked. As you'll see during the LST fine tooling pitches, this fungibility enhances the capital efficiency of your stake position. Now you'll be able to earn yield on your underlying stake SWE, but then also utilize your AFSWE throughout the SWE ecosystem. Now for us, an equally important goal that we set for our design was to not add any extra limitations that are not already present when staking natively. This means that we respect the minimum stake of one AFSWE. We keep all AFSWE staking and unstaking logic on chain. Now, what's really special about this requirement is that it was really only made possible due to the changes implemented from Aftermath's own SIP6. And then finally, and most importantly, you can delegate to any validator to receive AFSWE. This is strictly opposed by LSD designs that delegate to whitelisted validators or perform an algorithmic delegation strategy on behalf of the user. So lastly, we also really wanted to have a large focus on the use cases that are available for AFSWE across the SWE ecosystem. So with these goals in mind, you can really think of AFSWE as just a fungible extension of the native SWE staking mechanism. Now, since I only have 5 minutes, I'm going to jump over the flows and get right into SWE staking or AFSWE staking. So what does staking SWE for AFSWE look like for our users? It is very simple. First, you just need to select which validator you want to delegate to from a dropdown. So you're going to have a drop-down screen very similar to this, where you'll see every validator who's in the active validator set with some relevant information regarding that validator. Now, once you click, now you just need to input the amount of SWE to stake, and then you just click accept. You'll then instantly receive an equal amount of AFSWE. It's really just that simple, just one transaction. Now let's look at unstaking AFSWE back into SWE. So what's important to note about AFSWE is that it's reward bearing. So the longer that you hold on to your SWE, the more SWE you will receive when you do unstake it. And then also due to a caveat with stake SWE, we provide two different ways to unstake your SWE: delayed unstaking and instant unstaking. If you choose the delayed unstake option, you'll need to wait until the epoch advances in order to receive your SWE. So for this reason, we also maintain our own SWE reserves that you can use to unstake AFSWE with instantly, and you're basically performing a swap from AFSWE to SWE at the current exchange rate of AFSWE to SWE. Now, with the remaining time, let's jump right into our site and see all this in action. So here we're on Aftermath stake page on testnet, and you'll see the UI is quite clean and very simple. Up at the top, you see which validator you're going to stake to. Let me zoom in a little bit. You see which validator you're going to stake to. So here you can just click on the validator, and then now we have every validator who's active in the active validator set. So I'm going to go ahead and choose another one at random. Let's choose staking cabin. So now I just get to input the amount of SWE that I want to stake. Let's say 100 SWE. We'll see the current exchange rate of SWE to AFSWE is roughly 1-to-1, slightly favoring SWE. Now I just click stake, and you'll see one transaction. By the end of it, I'll be receiving my AFSWE. So I approve that, and then you'll see that it pops up down here when the transaction goes through. So there we go, staking cabin, 100 SWE. We also provide another flow into the staking flow, and that is if you've already staked natively and you have a stake SWE object, we allow you to restake that for AFSWE. Now for unstaking, again, we have the two different flows, instant unstaking and delayed unstaking. So let me choose 100 AFSWE that I just received. I want to unstake that instantly. I click on stake. And again, just like staking, you'll see I receive the SWE back instantly in one transaction. Then I approve that. If I had gone the delayed route, it's still one transaction, but I would just be receiving my SWE after the epoch advances. So time is running out, so let me get ready for the Q&A. Again, what's really important about both of our flows is that we have instant one-click transactions.
Awesome. So thank you so much, Kevin. Yeah, now we'll be opening up the floor for questions from our judges. So Cynthia, Emma, and Alonzo, take it away.
Yeah, just curious, can you briefly explain like what's your user acquisition and GTM strategy?
Yeah, good question. So we kind of talked about this on our goals for AFSWs. We really just want to focus on the use cases. So I'll get into one of our largest use cases in the second presentation. But some of the other use cases you can expect and how we're trying to bring on users is through the different integrations we're going to be creating. So if we're just focusing on the Aftermath specifically, with our AMM, we're going to have an AF sweep pool. Users can use that they can deposit into it with their AF sweep. They can earn fees off of trades through that. Um, that is also going to be connected to a router. But then also, if you think about staking SWI for AF SWI as a swap, like a unidirectional swap, and then using our instant unstake as a unidirectional swap from AF SWI to SWI, we've also connected that into our router. So you can, through a router, interact with AF SWI to SWI as a slippageless trade. And then if we're looking across other DeFi protocols, Bucket, some other Navi and Scalp, we're in talks with them. A lot of the top dexes on SWI, they're going to also house AF SWI pools. So we're really just focused on the integrations for AF SWI.
Gotcha, thank you.
Hey, Kevin, I have one question. And first of all, thanks for the really good presentation. I guess like the question is, in terms of choosing the validator set towards like the pool of underlying SWI to whom it's distributed to. I guess like on the staking side, it's pretty clear. Like the user chooses which validator to stake to. But like, how does the unstaking work? Like if I am a user that just buys AF SWI on the secondary market, and then I decide to sort of burn it to redeem SWI, like how does the liquid staking protocol decide which validator to unstake from?
Yeah, no, that's a fantastic question. So one thing that's important is that as soon as I delegate my SWI to AF SWI or to a validator to receive AF SWI, there's not a connection between that AF SWI and the validator. That connection is instantly lost. So if you do obtain it through a DEX or you stake it and then you transfer it to someone else, you lose who the stake SWI should be responsible to or be connected to. So the way that we handle on staking is on a performance metric. So we take the n least performant validators, and this n is some value that we've been modeling, and we're favoring somewhere around 20 validators, and we just pull an equal amount of stake from those validators, and we're modeling the number of n because we want to avoid the situation where during one epoch, because the metrics for the validators updated each epoch. So if you're in the n least performant validators, you're going to be like that for the whole epoch. We want to avoid the situation where, say, there's a black swan event, and it dramatically affects those validators. It doesn't affect them too much because it's equally spread out between the n validators.
Awesome. Thanks, Kevin. I have like one other question, but I wonder, like Cynthia or Emma, do you guys have more questions?
Yeah, so I am a bit curious about the two different unstaking options and why you offer these two options.
Yeah, so if we just had the default option, which would be the delayed unstake, there is, because one of the, I said caveat earlier, but because of an implementation detail stake sweep, when you stake it, it gets activated the epoch later. So that means until that epoch, its activation epoch, we can't unstake it. So that forces us to wait until the next epoch to allow us to unstake it. So hence the delayed unstake becomes the default. To get around that, there are use cases for wanting to receive AF or SWI instantly when you unstake. So we've just created our own SWI reserves. We run our own validator, and we're using some of the SWI rewards that we've been collecting there to start the initial liquidity of these SWI reserves.
Cool, thanks.
I guess just one final, very quick question. Oh, it looks like we're over. It's okay. We can do it offline. But Kevin, I really enjoyed your presentation. Thank you.
Thanks, I appreciate that. I'm curious what your question was.
I was just going to generally ask what are the tokenomics of the protocol, if there's like a governance token or like any other things that along those lines.
Yeah, should I answer that now or should I? You can wait for the second presentation.
Maybe in
too.
20 seconds. If you have a 20-second answer, maybe we can hear it now.
Yeah, so there are multiple different ways that AFSWE is kind of collecting revenue. Essentially, when you're unstaking, there are the two different ways have two different fees that you're collecting. And with those fees, we're collecting a portion of that and sending it to a treasury, which is going back to the AF token. So if you're holding out to the AF token, you are kind of collecting rewards from all AFSWE activity, as well as the AMM fees that are being collected from transactions. Portion of that goes to the AF treasury as well. And then AF is going to be allowable as governance.
Awesome. Cool. That was a great 20 seconds answer. Appreciate it. Thanks.
Okay, cool.
Yeah,
All right. Yeah, thank you so much, Kevin, Aftermath, and all our judges. Up next, we have DGen Hive. Let me add your team to the stage. Cool. You're up, Rahul. You're muted, by the way.
My bad. Yeah, my bad. Yeah, hi everyone. Okay, then I'll get started. Yeah, so hi everyone. I am Rahul. My name is Rahul. I'm the founder of Astrotech Labs, and today I'll be presenting DGen Hive, a DeFi-powered meta hive which enables anyone to own, interact, and play with AI characters and earn HiveSui on the site. So as part of this hackathon, we have implemented HiveSui as native currency of DGen Hive. For this, we have implemented a liquid staking module, which implements the logic for HiveSui Vault shared object. We support AMM pools, which integrate with our liquid staking layer as they convert all of their collected protocol fee into Sui, which is then staked for HiveSui. We also have an internal HiveCard marketplace, which enables users to trade or lend their Hive cards, for which HiveSui is the native currency for trade settlement. All these DeFi layers, they collect their protocol fee as HiveSui, which is then deposited into HiveSui disperser shared object, through which it is distributed among users through Hive profile. Now, if we look at our liquid staking implementation, it is implemented by HiveSui Vault shared object, which basically handles the custody of staked Sui objects against liquid staking positions. Like for staking, a user can optionally choose the validator they want to stake with. Otherwise, their Sui is staked equally among all whitelisted validators, a list managed by HiveDAO. For unstaking, we provide two options. One is instant unstaking, so for which we charge additional service fee distributed equally among existing stakers. Otherwise, users can opt for delayed unstaking, which has a unbonding period against which they are issued an unstaking ticket. Later, once the unbonding period has elapsed, they can come and like against their unstaking ticket claim their unstaked Sui. During these user operations, no validator interactions happen. HiveSui Vault supports public functions callable by anyone, which stake or unstake Sui with network validators. Now, if we look at governance, DGen Hive implements Hive profile, which are on-chain user profiles implemented as shared object, which have access to admin operations through governance implemented by HiveDAO. Each Hive profile earns HiveSui from HiveSui disperser shared object, and has governance power based on its HiveGem balance and number of Hive cards staked. Now let's have a look at quick demo. So this is the liquid staking section on our website. I can choose a validator here I want to stake with. Let's do that. As you can see, I'll get some Hive Sui against my Sui, which I'm staking. Some fun animation here. I can like opt for instant and staking here. Let's do that. As you can see, I'll get HiveSui directly against instant unstaking. I can also like choose to like go for delayed unstaking here. As you can see, I have made some unstaking requests initially, which are claimable now. Let's claim that. As you can see, I'll be getting Sui, which I staked initially. Here you can see the public functions which anyone can call, which execute staking or unstaking operations directly with validators. Let's try that. Now, if you look at Hive profile, so this is the on-chain user profile implemented as a shared object, which is unique for every user. This is my total Hive gem balance. This is my current voting power. And these are the AI characters which I own as NFTs. As a user, like I'll also be able to see like Hive DAI proposals here and later like vote for them. And as a user, I can just choose a character here, interact with this character here, trade this character. We'll soon add a gaming section so people will be like able to play games around this character. And if you look here, this is the like Hive Sui that I'm earning based on my Hive gem balance. I can just like claim it. And this is like the AM section that we have. We provide like we support concentrated liquidity pools with either 2 or 3 token pool. So we have a Sui Hive Sui USDT pool here, which is like V2 style concentrated liquidity. So it provides composability as the position is like tokenized versus being a LP, which Uniswap V3 has. I'll be able to like convert my like collected pool fee into Hive Sui directly from here. And in terms of the code, this is a currently open PR. We have it properly documented, which kind of documents how we have implemented liquid staking and how it is integrated with the overall protocol. Yeah, that's about it. So to summarize, we have a buyback mechanism where the pool fee is converted into Sui and then staked for Hive Sui. We like enable Hive Sui's distribution among users. Our dynamic NFTs, the way we have implemented governance through dynamic NFTs allows us to rethink DeFi applications and design them in a way which makes sense for Sui. And our metaverse concept model enable us to like create differentiated experiences, which can help onboard more mainstream users to Web3. So yeah, that's about it. That's all from my presentation.
Awesome. Thank you so much, Rahul. So now, yes, our judges, do you have any questions?
I guess one question. Hey, Ro, thank you for the presentation. Can you speak a little bit more about how this protocol supports decentralization in the validator set for Sui?
So yeah, like basically like as a user, anyone can like as a user, I can choose any validator I want to stake with. Other than that, there's a whitelisted validator list, which is not centralized. So that is managed through Hive DAO. So like as a DGen Hive user, anyone who is like using the protocol, they have a Hive profile within which we have an in-game currency called Hive Gem. Based on that, their voting power is calculated. And just by community consensus, that whitelisted validator list can be updated by the community.
Following up on what we just said, so it's like Hive Sui is also the governance token of Hive DAO.
So basically, we don't have a governance token. We have a gamified DAO model. So if I just like show you my profile here, so my voting power is calculated based on my like staked Hive card and my Hive gem balance. So we don't have a direct governance token per se, but it is a mix of my balance of this in-game currency and the Hive Hive card that I've staked. Because as I can stake a Hive card, I get boost on the gems, which kind of boosts my voting power.
I see. Do you think there will be like potential risk that like people manipulate the voting power by like holding a larger amount of like Hive Sui token to manipulate the voting power? Is there a risk of
I mean, it
that?
is not directly possible because there's an upper limit on maximum voting power that one card can unlock. So, like because of that, they can't like hold the voting power. Other than that, within one Hive profile, they can own maximum 15 Hive cards. So let's say if we have 20,000, 30,000 total Hive cards, so it's very difficult to concentrate voting power in that regard.
Gotcha. Thank you.
Yeah, I have a more technical question. That was a good presentation, by the way. So I'm curious, what Move features did you use that's like pretty unique in your contract? For example, I think just now you mentioned that each user's profile is a shared object, or is it like a dynamic field of a
Yeah.
shared object? Yeah, can you elaborate on that?
So yeah, it is basically a shared object. So I think this is the unique feature that we have like leveraged on Sui using Move, which is not possible on any other like virtual machine. And basically, this is a shared object where the owner is the admin. So he can only like control, like have access to certain capabilities of that shared object. And through this shared object, we have basically like innovated on the governance structure, because till now in DeFi protocols, if you are a governance token owner, you are a user, right? But they actually are not the user, and that is more gameable in that regard. Here, people who are actually using the protocol, they are the user. Only those have like hive gems and like voting power within the protocol, and it like promotes actual like usage of the protocol, right? Instead of just like owning a token on a centralized exchange.
Yeah, so since each user's own profile, you're saying each user's own profile is a shared object. Is there any reason why it cannot be like, oh, I mean, you said it was a shared object. Any reason why it cannot
Right.
be an owned object?
The reason we have it shared object is because of composability. So as you can
Mhm.
see, like we have implemented the whole marketplace within the shared object, right? So it enables peer-to-peer trading. So let's say if I'm making a bid for like a Hive card which exists in some another Hive profile, I can use that user's Hive profile, right, to make a bid. But still, I
Uh,
don't have actual like access to certain like functions of that object, right? Because of that, I think like shared objects are like better feature for this kind of like utility versus owned object, because no other user will be able to call that.
okay, sounds good.
Okay, thank you so much, everybody. Let's now go on to our next participant. Up next, we have Hadel Protocol.
Hi there. Can you hear me?
Yes, we
Shine?
can.
Cool. Okay. Sure. Let me share the screen. Okay. Can you see it right now?
Yes, we can see it now.
Okay. Cool. Sure. Shall I start?
Oh, yes, go ahead.
Okay. Hello, guys. This is Cedric from Hado. So Hado is the first liquid staking protocol being audited and launched on Sui mainnet based on the POS mechanism. We can tell that Sui has many application scenarios. It can be the gas for transactions on chain. It can also be the stake into validators to secure the Sui network. It's also a financial asset and the centralized exchanges to be traded with flat money like US dollars. So it will contain both financial value and also the value of native token. And the one important thing I want to mention right now is I think a sense of finance is about the allocation of assets. So Hado as a liquid staking protocol is going to tell Sui apart from its financial attributes. So let me show you guys the product right now. You can see this is our official website, and click into our stake page. We split it into two main modes with automated mode, or we provide like the validators with the most active ones and with the relatively highest APYs. And the second one is the manual mode. Users can choose whatever validator you prefer and stake into it. So I would just enter one Sui with which is the minimum amount of staking, and click approve. So after a few seconds of processing, has been staked. And for withdrawal, we also provide two moves as well. You can withdraw by unstake. It will take you around 1 or 2 epochs. For the second one, it will be the instant swap. It will charge like 9% of fee to withdraw your asset to your wallet instantly. And for on the claim page, you will be able to see after you click your withdraw by unstake, how much time you're gonna wait to see your digital asset back into your wallet again. Let's go back. So Apart from the basic LSD model, we also provide a delegated staking for Halo users. It's kind of an alternative for users to benefit from the delegation strategy with the most active and highest APY validators. You can see it as a small vote for those lazy investors who are aiming for a relatively high return and who don't want to interact with too much DeFi protocols at the same time. So right now we provide two options for users to either stake on to go with the normal staking on Halo and get hash in return, or stake Sui in our votes. And right now, Halo has already set up a few integrations. So on the first round of integration, we, thanks to Sweet Builder House Singapore, we have some close conversations and has talked to a few projects, established 3 or 4 integration, including the CDP protocols like Bucket, the lending protocol like Scallop, to accept Hasui as one of our collateral for users to mint other digital assets on chain. And integrations between these protocols and us is already testing on testnet. So we have already started the second round of integration with some other protocols on chain as well, such as some LSD5 projects like WizSwap's LSD aggregator and the D6 in-wallet staking function, which they are also shortlisted by this hackathon. I think these integration would be ready very soon after the staking hackathon. Hopes. And also, we're gonna set up a liquidity pool. We already set up a liquidity pool of Hasui to Sui on Status, but we are also gonna participate in the Status Vault, which will be available in 2 or 3 weeks. The LP token of Hasui to Sui will be accepted by other DeFi protocols as collateral to restake for more use cases. At that time, the DeFi flywheel will be rolling and the TVL of a Sui will boost up real quick. Then I want to mention the Halo DAO. So Halo DAO represent the ownership and control on Halo's treasury. It will Halo DAO will decide things like the allocation proportion of incentive on farming and the discharge rate of incentive. And we'll be adding the IBO VE33, which will be really attractive for users to get involved in the Halo DAO and become one of the long-term holders. So what we are trying to do is to focus on a liquid staking protocol, because I got questioned by people, how would Halo stand out compared to other liquid staking protocols? In my perspective, I don't think other LSD protocols are competitors, but we're more like helping each other. So if market share split into 3 parties or even more, I think we will plan to stop growing at a certain point, maybe around 30% or 35%, to make sure it's decentralized on Sui. So we are lowering our threshold to build an entry for new users from Web2 and maybe from other ecosystem to participate in the liquid staking or the DeFi on Sui. So we're expecting the users to use our token to get involved in all the DeFi protocols on Sui and getting a high incentive from Halo in any DeFi protocols, and then stick and stay on Sui. So we are building a protocol to both users and to the teams and to the builders on chain. So right now you can see we might only have 6-ish users, but think of an example of Marinade. They probably only got a few thousand users, but all the users and the community are very sticky to the project. For Halo, I think most of the early participants are very diligent. We talked to some of them. We talked to some of builders in the ecosystem during the hackathon, during the builder house. All of them are sending us some feedbacks, and we are always optimizing our product with these feedbacks to build a better product. Always updating our front end design. Also design a more suitable DAO for Halo and for Sui. Issuing our token in the future, and then boost the TVL with our incentive with all of the DeFi protocols. Thank you.
All right, thank you so much. Now
Yes.
let's turn it to our judges for any questions.
Can you elaborate a little bit more on the governance model for Halo DAO?
Sure, sure. So for HaloDAO, we are now thinking of a few models, but we're still deciding on it. So for the VE33, I think we're providing an opportunity for users to keep their token stake in the Halo, and then that kind of solve the problem of selling power. So without that model, users might don't have the interest to get into HaterDAO because they are kind of more than speculators at this current stage. So we are creating this HaterDAO V33 model to keep keep the value of Hado and let their have the decision on Hado's incentive. So when we have farming options on Status, on Scallop, or other DeFi protocols, then they will be able to charge like, oh, how many incentives on each farming pool they will get, and how fast, how many tokens they will get. As the token release, they will have more power, and then they would be the team to decide and to continue the flow of Hado with us.
Gotcha. Thank you.
Yeah, I am. That was a good presentation, by the way. So I'm curious about the two staking modes you have.
Yep.
So I think there is the manual mode where the user can choose which validator they want to stake with, and the automatic mode. Can you elaborate on how the automatic mode works? What is your algorithm for choosing the validator?
Sure. So currently, we will choose 10 most active and relatively with the most highest APY validators on chain for users, and we will check and delist the inactive ones, which are also the validators which will be which not the validators which is not going to be live in the next epoch will be delist as well. So it's always updating the list.
Cool.
Okay, awesome. Is that it?
Sorry, I have one more question. Are there like any creative use of unique Sui features?
Oh, I think for us, the delegated strategy for Halo staking is pretty different because we are we are trying to split the staking account and the normal account into two parts. So in that part, users will retain their custody on their Sui token instead of getting the ST, like the stake version of Sui, like other liquid staking protocols.
Gotcha. Thank you so much.
Cheers.
All right, awesome. Thank you so much again. Up next, we have Interest Protocol.
Hello, Cheyenne.
How are you doing, Jose?
Good. Can you bring Tony up? And I have slides and then a video. And when I finish the slides, if you could put the video just playing.
Yo. So you have the slide. You want me to pull up the video after? Is that right?
Yeah, I'll just say now we're gonna show the demo.
Okay. Okay.
I'll take the questions. Thank you. Thank you. Let's get it going. For this hackathon, we built a liquid staking protocol with strip bonds. With strip bonds, there are three core principles. First, it is decentralized. The users can stake and unstake from any validator, just like he would through his wallet. Second is non-custodial. The protocol acts as a liquidity layer between the user and the validator. And thirdly, it is fair. There is a built-in algorithm that incentivizes users to deposit to the right validators. We have two staking options. The first, you deposit SUI and you get a receipt token, iSUI, which then you can burn it to get your initial deposit at any yield accrued. Our second option is way more interesting. So we call strip bonds. When you deposit SUI, you get 2 coins. The first is the principal coin, which represents your initial deposit, and the second is the yield coin, which represents all your future yield today. The principal coin can be redeemed back to your initial deposit 1-to-1 after the maturity date, while the yield coin accrues yield in real time, which can be claimed, and stops getting yield after the maturity date. It is important to note that you can always redeem your initial deposit plus any yield accrued by burning both tokens. Why do they build strip bonds? Why are they so cool? Well, they open new strategies that are not available on the Sui network today. First, fixed income strategies. You can also long yield or you can buy discounted coins. A very interesting fact is that our bonds are actually SFTs, so semi-fungible tokens that can be split and joined just like coin, but only if they have the same maturity. Our algorithm is actually a deposit fee. Each validator in each epoch has a unique deposit fee based on various factors, including voting power, telling rule, proposed gas, and commission rates. This will really push users to the best validators instead of just looking at APY. We take our community very seriously, so we built a native review module. We basically incentivize users to upvote, downvotes, and leave comments for validators, which helps other users make more informed decisions. At the end, it keeps Sui network more secure and decentralized. It is crucial that iSui is as fungible as Sui. Therefore, we are in talks with the top DeFi protocols in the ecosystem. We're also building an AMM so people can buy and sell the principal and coupon coins. And of course, we're going to build way more strip bonds, the first being USDC. Now we're going to move into the demo. If you could, Cheyenne, please.
Our LST comprises 5 sections: stake, bonds, portfolio, validators, and stats. Stake section. On the left, we have the price of Sui, key metrics about the protocol, exchange rate, epoch, and frequently asked questions. To stake, click on Stake. Manually select a validator to view information such as APY and ranking. I'm choosing the default validator and staking 2 Sui. Click on Preview Stake to fetch the latest exchange rate, then I click Stake. The wallet will pop up, accept, and wait for the confirmation. To unstake, click on Unstake. Click on Preview, followed by Unstake, accept the transaction and wait for the confirmation. Portfolio section. Here you can see all the assets managed by the protocol, your sway, the individual coins, and coupon and principal tokens. Validators section. Here you will find information about all the active validators, how much they have staked, APY, voting power, and commission. You can click here to view a specific validator to check their information and view the reviews by other users. Here you can see the overall ranking among all the reviewed validators. You can see the current upvotes and downvotes in which you can participate and also leave a comment. For that, first, mint a soul-bound token for Sybil protection. After obtaining the SBT, you are allowed to leave a review. I'm going to leave one. Click on Publish and the review is made. Stats section. View the stats about the protocol, number of users, tokens minted, exchange rate, rewards over time, and TVL. Bonds section. The first page presents the functionalities. Let's start by creating a strip bond. First, you pick a maturity and see the information updating in real time. Select the amount of Sui and pick a validator manually or make an automatic choice. You can preview all the transactions here. I'm going to get one of each, 1 coupon and 1 principal token when depositing 1 Sui on this validator. Click on Stake and the wallet pops up, and I'm getting the tokens. Click Approve and you will get the confirmation. So now that I have 2 tokens, I can get the Sui back. I can't burn the iPrincipal as it's disabled because it hasn't matured yet, but I can combine both coupon and principal to get my initial deposit. So, I claim both, which mature in 2 days. I'm going to put the max amount and click on Unstake. I'm going to get minus some transaction fees and get my underlying back. Now for the last tab, it's the claim rewards. There are no rewards because I just burned the tokens, but the UI is also very simple. It's going to show you the maturity date, and then you're going to pick one. And if I had it, I'd click on Claim Rewards. Thanks for watching.
Thanks for watching, guys. That's it. I think Tony and I will be taking any questions you guys may have.
Awesome. Let's bring our judges back up on stage and feel free to ask any questions.
Yeah, I have a question. You mentioned the protocol is non-custodial. What does that mean exactly? Does that mean the user will get to keep their or like self-custody their stake Sui while they are earning your yield?
Yeah, so there are several parts which are all non-custodial. So for the staking part, the staked Sui objects are all kept in a shared object. So the staked Sui are never owned by interest protocol or an admin key. And also for the we have this additional module for locking assets in a soulbound token. And so these allow people to lock or stake their assets in their own wallet, as opposed to staking like you see on other blockchain in smart contracts. So this is also non-custodial because interest will never own users' assets actually.
Okay, thanks.
Thanks,
Hey
guys.
guys.
Quick.
Oh, sorry.
Oh, sorry. Go ahead, Cynthia.
Oh, I was gonna ask, can you elaborate a bit more on your GTM strategy?
Yep. So here as well, we have multiple approaches. So the first one is obviously to get the iSui token everywhere in the DeFi ecosystem on Sui. So we're already in communication with the many DeFi protocols like WispSwap, Typers, Turbos, Navi to integrate the iSui in their protocol. We also want to incentivize the use of iSui everywhere via allocations of Sui during marketing campaigns. Then there is another side, which is the all part of the review and points module we presented. So this uses points instead of classic airdrop stuff. So with these points, we can incentivize people to interact on the protocol and to leave reviews and to actively participate in the decentralization on Sui. But we can also open, it will be open to any partner to build on top of this point mechanism with the SBT. And so all that we can encourage people to perform actions on turbos, for example, with the iSui. We can encourage people to leave reviews, etc. And with this, we can get a lot of traction on social media because we've seen, for example, on Solana, Margin Finance is doing that and it's working super great, whereas people don't even know what the points will bring them. So it's really a communication strategy with that.
Gotcha. Thank you.
I have a quick question. So I wondered, I was hoping you could maybe dive a little bit deeper into the bond part, and that has probably some what is your vision in terms of the composability of those bonds and what can they be used for in the broader DeFi ecosystem in Sui?
Yeah, so we initially built that for the liquid staking, but actually it doesn't make that much sense for the liquid staking since the APR is just expected to go down. But we're building an AMM to trade the street bonds. And actually, we will build many things on top of this. So with the lending protocols or anything basically with the USDC that has APR that vary, and that makes more sense because you can get a fixed APR instead of wondering if it's gonna go up to 8% or 1%. Or maybe Jose, you can add something there.
Yeah, I think you summarized pretty well. But basically, the main contribution for the DeFi ecosystem is that you're gonna be able to bet on the interest rate of every lending protocol or any yield-bearing DeFi because we grab the yield-bearing token and make a bond, and we're gonna use Scallop and Navi and the Navi underneath. So if we wanna bet on the interest rate of USDC on Navi, we're actually adding liquidity to Navi because we're putting the yield-bearing token and you're making money on top of it. So it actually bolsters the entire Sui network DeFi ecosystem. Anything that has a yield-bearing token, we can build a bond.
Cool, thanks.
Thank you.
Okay, looks like that's it. Sorry. Now let's go on to our next participant, Legato.
Hi, my name is Pisut. All right, so we are Legatos, a yield tokenization protocol for stake sui objects. After the SAP 6 updates, we now receive a stake sui object that represent like how many sui token that you are staking on the validator node, right? So basically, it opened up the new opportunity for the developer like us to build a DeFi protocol on top of the stake sui object. But the main problem is that the stake sui object, it doesn't the same to the stake is on Lido because stake sui object is non-fungible like the ERC1155. When you receive the stake sui object from pool A and you have another one from pool B, you cannot combine together. And we need to dealing with the uncertain yield. And another point is some pool may have risk of slashing. Unlike the Lido that they are carefully pick who going to become their validator, right? So introducing the legatos, we provide a liquid staking for stake sui object through a time lock wall. It actually working by having two type of tokens, serving two group of users. The first token is the principal token or PT for someone who want to log in the APR. It works by you just log up the stake sui object into the legato wall, and then you receive the PT token that include the yield that going to earn until the wall is expired. And the PT is fungible. You can trade it anywhere, including the Legato order book marketplace. Sorry, and we do have another one token, which is the yield token or YT. This token is for someone who want to actually short and long the APR rate because the APR can be higher or it can be lower, right? For example, if you expect that the APR of the is going to be higher, you can buy the YT and then you can claim the yield on the surplus collateral on the time lock vault. For the GTMs, we're going to expand on the other blockchain to go beyond SUI, especially on the non-EVMs, because the EVM is like the red ocean, right? And we're going to launching our tokens. So let's come to the demos. Our project has been live at the Legato.finance on SUI testnet. Right now we have one time lock ball available to stake, but first we need to get the stake SUI objects. We do have the wrapper that you can wrap your SUI token into the stake SUI object that have the same structure when you stake with the validators. For example, we can wrap 0.2 SUI tokens. So now we have a one stake SUI object containing 0.2 SUI. And once we have the stake SUI object, we can choose the time lock wall. We're going to stake. We're going to choose the one that's going to expire July next year. And then we need to choose the objects. We have one object right here, right? And when we click mint, you will be able to receive the fungible PT token of 0.205. 0.2 is 0.2 SUI here, and 0.05 is the future yield that you will be earned when the wall is expired. You just click mint. When you click mint, you will receive the PT token. Right now, I have a 0.2 something PT, and we can trade it on the marketplace. We have two type of marketplace. We have the marketplace for PT, which is based on the order book, and we do have the marketplace for YT, which is based on the MM. For example, we can sell the PT token. We need to set how much we want to sell, and we need to set the price. we should give the discounts because it's going to attract the potential buyers because this is the future stake sui object, right? PT is equivalent to the future value of stake sui. I'm going to sell 0.1. So now the order has been created. We need to wait for someone to actually would like to buy the PT token, right? Let me switch to another wallet and refresh. So then I'm happy to buy the 0.1 PT at this price. So I just click fill. You can partially buy it, but it not yet support on the interface right now. So right now you have the PT token. And then for the YT, you can buy the YT from the AMM. The objective of the YT is that if you expect the API is going to be higher, right? You can have the YT and then you can claim the yield over time, but it not just support from the interface. And I think that all for us. Thanks. Now we are ready for the questions.
Yeah, thank you so much for the presentation. Just a clarification question. So regarding the design of your protocol, is there a liquid staking token, or there are like basically two tokens in the format of PT and YT, and that's it? So when a user stakes SUI into your protocol, they will only receive like PT and YT token. Is that right?
Yeah, you will receive a PT and YT tokens.
Okay. Just a follow-up question here. Then, what's like the use cases of PT and YT tokens on other DeFi protocols? Are there any use cases that you can work with, like other DeFi projects within the ecosystem?
So for the PT, right? So it's fungible token, so it can be traded on any other exchange. We have our exchange as well, but if you're not certified to trade on our exchange, you can list it on other exchange. And so that for the PT and for the YT, you cannot able to trade on like any other exchange because this is like the special token that you can collect the yield from the time lock vault. The potential of the PT is supposed to be only the other potential with the other DeFi project supposed to be only the PT tokens.
Cool. Thanks.
Yeah, good presentation. So what are some of the unique swim move features that you have used in when you're writing your move code, and like which are your favorite ones?
The unique move, I think writing the smart contract with move languages is super challenge. It's totally different from the Solidity, right? But
Yep.
I think for me, I think right now it's more clean, and we can write the object like self-storage object that it cannot like control by even the smart contract. Even it not cannot control by like other wallet. It can run, it can maintain by itself. So it's super unique for the object, right? And I think I think you have like very huge potential about writing the smart contract with the move objects for me.
Thanks.
Okay, are there any other questions?
Yeah, please go ahead.
Okay, yeah. If there's no further questions, then we can go to our next participant. Thank you so much, everyone. All right, up next we have Suisa.
Hey,
Hello, how are you doing?
I'm doing pretty good. Yeah. Should I start?
Go ahead.
Okay. My name is Ion, and I'll be presenting for our project Suiza, which stands for Sui Staking Aquarium. Liquid staking tokens are the first steps to creating a DeFi ecosystem on any proof-of-stake network. Users can tap into rewards previously reserved for the validators, increasing the on-chain TVL, and fungible stake tokens can be used to improve yields across the board. The key word for creating an LST is fungibility. Luckily, the heavy lifting of delegating Sui tokens was handled by the Mistin team with their Stake Sui implementation, and SD Sui is a wrapper around Stake Sui that solves for its fungibility. Stake Sui has pool ID and stake activation epoch as fields. If two Stake Sui objects don't share the same values for these fields, they cannot be merged together and therefore aren't fungible. An LSD protocol must deliver a token that's fungible regardless. Stake Sui being non-fungible across epochs also means they aren't fungible regarding unstaking. To fix this, there are two paths you can take. Instant staking with delayed unstaking or delayed staking with instant unstaking. With delayed staking, users must wait until the end of the epoch to collect their SD Sui. This works more like how Stake Sui works natively and fixes some of the problems that instant staking has. Instant staking has a depeg risk and creates a peculiar situation where the rewards are unfairly distributed. Now, what do I mean by the rewards being unfairly distributed? Let's assume that 100 Sui has been staked on the first epoch. Since staking rewards are only distributed if the Sui has been staked for a full epoch, no rewards are given out until the start of the third, and the Sui to SD Sui ratio doesn't change until then. If another 100 Sui is staked on the second epoch, the second staker will receive the same number of SD Sui as the first staker. At the start of the third epoch, the staking rewards from the first 100 Sui will change the Sui to SD Sui ratio, rewarding the 100 Sui staked on the second epoch, even though it didn't contribute to the rewards. Because SD Sui tokens are fungible, we can't distinguish between the two. That's why for Suiza, we decided to go with delayed staking. This is how the liquid staking flow looks like in Suiza. When a user stakes Sui, they receive a box NFT that acts as a claim for SD Sui. At the end of the epoch, they can hatch the box to claim the SD Sui in the form of a dynamic NFT. You can always burn this NFT to get the underlying SD Sui, and SD Sui can be unstaked immediately, instantly, whenever the user wishes. Now that we solve for unstaking, we need to solve for validators and epochs. Internally, SD Sui represents a share of a vector of stake Sui objects managed by the protocol. We use one validator per epoch, and newly added Sui are staked and merged to the end of the vector. Since we only use one vector per epoch, we need a way to decide which validator to use that's fair and benefits the stakers. We achieve this through an auction mechanism which initiates a rebalance. During a rebalance, we unstake 50% of the total Sui stakes, and then we restake them into the current epoch under the validator that won the auction. This removes stake Sui from stale validators into a validator that has currently better yields. So how is the auction won? First, we list the validators based on the performance, and we only allow the best validators to participate in the auction. When the vector becomes 30 nodes long, the best validator can initiate a rebalance. If it doesn't and the vector becomes 40 nodes long, up to the second best can participate. And when the vector is 50 nodes long, up to the third best can participate, and so on. Since rebalancing will cause 50% of the stake Sui to not accrue staking rewards for an epoch, the auction winner pays this difference to make the stakers whole. Since validators earn a commission on delegated Sui, there's more than enough of an incentive to pay for the auction. In this system, stakers get the benefit of higher yields by periodically updating to the best validator without loss. This theoretically gives users a better yield than vanilla stake Sui. DeFi usually offer yields in two different forms, protocol tokens or stablecoins. Protocol tokens are for those who believe in the protocol and have high conviction. Sui staking is no different, and Sui stakers are those who believe in the ecosystem and are bullish on Sui long term. We wanted to create dynamic NFTs for those users to express their conviction. The form of your NFT depends on how much Sui you staked and for how long, and the NFT will grow over time. And to reach the final form, the user must initiate a reveal that takes advantage of Sui's verifiable random function. Depending on the final form, users will get benefits such as paying less protocol fees. Our team will make use of SD Sui for our next protocol, Sui. Sui is a synthetic perp DEX that trades leverage Sui price squared against the vault. If traders win, the vault pays out, and when they lose, the vault benefits. The vault asset, collateral used by traders, and PNL will all be in SD Sui. To encourage vault investments, dynamic NFTs can also be used to fund the vault. When this happens, the dynamic NFTs take their final transformation and turn to gold. Thank you for listening, and you can check out Suiza today on DevNet. The links are on our Twitter at Suiza Club. And that will be it for my presentation.
Yeah.
Okay, thank you so much. Oh yeah, judges, go ahead.
Yeah, thank you so much. I have a few questions. So first of all, do you have a product demo that can showcase the interface design and usability?
You can go to suiza.club and it's working on DevNet right now.
Okay, gotcha. And the second question is regarding like just now you mentioned that the PNL of the perpetual protocol you are going to build can be settled in ST Sui. Can you please explain how does that actually work?
Since all the assets in the vault are in ST-SUI, we were going to use an Oracle, and the dollar amount is going to be paid out in ST-SUI.
So you were saying like the vault asset will be in ST Sui, is that correct?
Yes.
Will that be like any risk if ST Sui depeg, and that will be kind of like the domino effect for the perpetual?
So since we opted for delayed staking and instant unstaking, it's impossible for ST-SUI to depeg, and ST-SUI will actually be traded at a premium because ST-SUI can be unstaked for without delay. So people who don't want to wait to get their ST-SUI because it's delayed staking, they would have to pay a premium to buy ST-SUI. So there's no depegging effect for our protocol.
And regarding like the data published resources for ST Sui, because I think like most of the oracles won't be able to won't be able to like feed liquid staking tokens right away. So like how do you deal with that to get real-time price
Oracle,
this way?
we can create our own Oracle as long as we have the SUI price Oracle. Since we have the SUI to ST-SUI ratio on chain, we just need to simply multiply the SUI price Oracle with the ratio, and then we can get the ST-SUI price Oracle.
Okay, thank you so much.
Hey, cool presentation. Quick question on the rebalancing. So please correct me if I'm wrong, but from what I understood, it sounds like every once in a while, 50% of the stake rebalances, but it goes to a single validator. Is that correct? And so are we sort of creating a world in which I get that the validators that Suiza is staking with change, but at any given moment, it is only a very small set of validators to which the Sui tokens are staked to.
Yeah, so it will typically be two validators that are staking most of the SUI on Suiza. But they will be the best performing ones, and it will benefit the end users with the highest APR. So theoretically, like we will have the highest APR out of the staking services.
Got it. But I guess like thinking long term, if this were to become like a very big thing, do you guys think that you would maintain this type of model, or like it would be upgraded into something that perhaps is a little bit more broader coverage across the validator set? Or what are your thoughts on that?
I think that's a very good problem to have, where Suiza has that much SUI. I think that the process is permissionless, so there's not going to be that much like side effects regarding centralization. Like there's not that much of an attack vector. And since the stake SUI don't stay for like indefinitely, in a sense, it's still decentralized in a time slot basis.
Okay, cool. Thanks.
Yeah, I have a question about the auction mechanism. So I'm just curious about like how does it work? Is it going to be a smart contract where validators can interact with to bid in an auction, or is it going to be off chain? How does it work?
So it's fully on chain, and the way you participate is you have to be the validator with the highest APR. So we can check the APR on chain, and let's say the list, the vector is like 60 nodes long, then up to fourth place can participate in the auction, and it's first come first serve. And to initiate the auction, to win the auction, you have to pay the difference that the protocol will lose during the rebalance. So the validators have to pay SUI to win the auction. and that's going to benefit the stakers.
Cool. And is that live on DevNet as well?
Currently, we actually talked about this last time. We needed the validator set function to be public to implement this. So we're waiting for the PR to get merged, and then we can swiftly implement this.
There is a getter for the validator addresses.
Oh, okay. I didn't notice that happened, but it wasn't there last time, and we'll like swiftly implement that. Yeah.
Cool. Thanks.
All right. Thank you so much, everyone. Now, time for our final participant for the liquid staking protocol, the actual liquid staking protocol. Up next, we have Valo.
Hey guys, can you hear me?
Yep, we can hear you.
Awesome, lovely. Hey everybody, hope you guys having a good day. I'm here to pitch and talk a little bit about Volo LST. Basically, we are a liquid staking protocol that's only designed for SUI. We want to truly decentralize and help on the process of decentralization of the node operation and validator, so we can really achieve, I think, what is like a core piece of all the major layer ones. And we are here basically to create a protocol that's not only for us, but really run by the community and for the SUI community. You know, our team has a lot of different people that really are expert on this field, but mainly like what I want to cover is like our product. So basically, I think what differentiates from the other protocols is the fact that first, we are only doing like liquid staking, and that's like our main focus, as we believe, again, this is a core piece of the majority of the layer ones. And basically, on top of this, we want to truly decentralize all the node operation. And basically, the way we're going to do this is through validator gauges, where users can vote on the validators they want to have. I think also like regarding our user growth and go-to-market strategy, I'll cover this better later. But we have a bunch of different gamified LST incentive programs like the SU Wanderers that we believe can really help attract and gamify the user experience when it comes to liquid staking. As I said before, we believe that decentralization is a core piece of this protocol, as we believe liquid staking is a core piece of a given chain. So in the beginning, when we're going to launch Volo on mainnet with all the audits, and basically we're going to allow any validator to be part of it. And however, they cannot have more than 50% of any staked SUI, and we're going to, whitelist them based on several criteria like reliability, commission, APRs. On the second phase, it's really where we're going to try to boost the adoption of Volo SUI. And by doing this, we're going to have a lot of go-to-market strategies with, KOLs, with key partnerships that I'm going to later cover as well. And last but not least, we believe is really like the formation of the Volo DAO, where the stakers can decide, not only governance proposals, how the validators get deposited, but also be part and be stakeholders on the project, as the revenue that's going to be made from the liquid staking is going to redistribute to Volo stakers. Here, I can cover a little bit of the contract infrastructure, but I think the most important part is the staking process. As I said before, then staking process follows a similar path. And this is, again, like a schematic scheme of how can we do this on the smart contract level. Again, our role is to ensure like the most easy and smooth experience, and not try to control any other validation and delegation of this. We also already completed several different audits from MoveBeat and Hackathon. We are just waiting for the OtterSec to be done and deployed. Again, our product roadmap, we are ready to go. We are already on testnet. We're already partnering up with several big protocols. And yeah, we hope that by Q1, we can have our protocol fully functioning and fully decentralized and fully operational. The Seconders program, just to cover a little bit, it's basically similar to what has been done with other chains. And basically, it will create a gamified system where users, when they stake their SUI, they get points that will, align the incentives of not only staking Sui but also providing liquidity to some of the other protocols, and use as well not only Volo Sui but also the entire ecosystem of Sui. I think this is quite meaningful, as it basically allows you to create a vibrant community that not only tests liquid staking and maybe try liquid staking, but also is part of the entire DeFi ecosystem in Sui. Covering a little bit as well, like on the Volo DAO, I think another important another important part that's important to remember is that we're also going to airdrop a large percentage of these tokens to several, not only validators, but also projects. So basically means that the entire Sui ecosystem will have a say on the governance of Volo, and will have, be like a stakeholder of Volo. And I think this is quite meaningful. This is also like our Volo tokenomics. As you can see, we're going to airdrop a lot of it to the community as well. We have, here are our vesting schedules. And regarding strategic partnerships, I think this is where we really as well highlight up. For instance, on Avi, we're not only talking about listing Volo there, but we also are closed that already. For instance, like we are basically going to use the Heidel Sui that Navi has on Volo Sui, and this will basically allow to further boost the yields of their protocols. We also have, the one stake button on Bucket, for instance. We also have cool partnership with Wisp, so we can do the leverage vaults. So basically, we're already well connected to majority of it. Also, I think it's important to mention that we have bootstrapped 600K, so more than $500,000 in order to bootstrap our LPs across, Korea, Cetos, Turbos, and all of the current dexes, and we are more than open to participate on that. And right now, just going to really quickly run through the demo. So users can stake one Sui, and they can stake their Sui back to their Volo Sui back to Sui. So it's really easy, really straightforward, and that's it. Thank you for your time.
Thank you. We'll now open up the floor to our judges.
Cool. Thank you for the presentation. I guess one question, can you talk a little bit more about the validator set and how Volo supports decentralization on Sui?
100%. So first and foremost, it's going to be the fact that we're going to basically distribute the Sui among multiple validators, and it's not as that going to decide like delegation strategy, but what's going to happen is that the community can decide the delegation strategy among the multiple validators. And we believe that this can help further decentralized, because based on that, we can spread our Sui across multiple validators. And what we've seen sometimes is that users tend to go to one single validator or a single set of validators, and of course this can pose a threat to the Sui decentralization. So with our system, we believe that we can let the community and DeFi protocols and the validators to help a healthy delegation strategy across multiple validators across the Sui ecosystem.
Cool. Can I ask another question?
Of course.
Can you tell us a little bit more about the tokenomics of Volo? Sort of what is the business model of the protocol? Whether there are fees, what they're used for, all these kind of things.
Yeah, for sure. So basically, we're going to charge 10% of the APR. And basically, we're going to redistribute back that to Volo stakers. And this is very interesting because in order to vote, you also need to stake your Volo tokens. So it aligns the incentives not only of the validators and the stakeholders to delegate and have a proper delegation strategy that will result in the best APR and that doesn't pose a threat to the ecosystem, because in the end of the day, that will means that they can also accrue more revenues for their token. And of course, this token also means that they can have access to the governance and be part of the decision making of Volo.
Got it. Thank you.
Yeah.
Oh, go ahead.
Yeah. Can you talk about like some unique features that you have utilized for Sui?
Yeah, on the smart contract level, you ask. Yeah, I'm not like the technical guy, but I can ask that to our CTO, and we can circle back with you if that's possible.
Okay, sounds good.
Okay, if that's it, then we can go on to our sponsor talks and our break. Thank you so much again, everybody. So our first sponsor to talk will be Alibaba. Can I bring Alibaba on stage? Awesome. Here we go. How are you doing, JC?
Hi, Cheyenne. Can you hear me?
Yep, we can hear you, and we can see your screen.
Awesome. I'm doing fine. And hello, everyone. Good morning and good afternoon. My name is JC. I'm from Alibaba Cloud Zen. I'm based in Singapore. And it's really a pleasure talking to all of you about our Zen security solution. Right. So for the interest of time, I'll just make it quick and sweet. And feel free to reach out to us if you have any question regarding this solutions via Sui team. So over here today, I'm bringing 4 solutions from Zen brand for you. Right. The first one is a smart contract review. Right. So as you know, we have a team of experts that are very specialized in smart contract development deployment. Right. So we have them as our professional reviewers for your smart contracts. Right. Then we provide Zen KYT, know your transaction or know your address SaaS services. And we have the eKYC, which is also known as the identity verification solution. Lastly, we have the RPC Note services that will help you to make your D-app development so much easier and your data so much easier to access as well. Firstly, I'll talk a little bit about the smart contract review services. All right, so just now, what I was talking is actually referring to the professional version, right, where we will engage our experts to perform a vulnerability review, code convention review, compiler bugs, so on and so forth, right? And on top of that, we also provide our advice in terms of gas optimization. We also have an express version where it can think this as an automated version. It's like a code spelling for the smart contract development, right? So this essentially is an instant automatic check for your development. Both are actually free for trial, right? Feel free to reach out to us if you want to have a look. The key strengths ultimately is about accuracy, security, as well as the cost saving. Next, I'll talk about the KYT, know your transactions. Right. Essentially, know your transaction is to address the compliance as well as the regulation requirement. We want to help you mitigate the risks of financial crime and also to increase transparency and accountability. So this platform that we are providing give you access to real-time transaction analysis as well as address analysis, right? We can provide detailed reports as well as clear visualization for you to understand about your users' transaction as well as their counterparties. Next, I'll talk about the KYC, which essentially is used to identify the user's ID card or their selfie photos, right? So as to perform the regulatory business as per required by the regulators or by whatever relevant authorities, right? So the flow is very simple and easy, right? Just to scan the ID card, then take a selfie, and instantly our AI will be able to recognize the details from the ID as well as the selfie to provide you with the results. Right. We are also launching a privacy-oriented verification solution so that it's more of a DID solution right? So once that user has done the eKYC on one of the platform, right, all the parties in the same platform could make use of that. A little bit more on the strength, right? We provide superb user experience, right, and also great reliability and security powered by Alibaba Cloud. We have global ID coverage, as well as very comprehensive services and quick integration. Right. Lastly, I'll talk about our RPC node services. Right. We give the capability for the ecosystem, for the builders to have a really easy and a convenient building experience. Right. So currently, we have been seeing the market is suffering from these pain points, right? So the SLA is very poor. There's usually very high latency, right, and a lot of times high cost as well, right? So what we are providing over here is a Zen node service that will offer great performance, great security, and developer-friendly interface. Right. On top of that, we also have a lot of advanced features, right? So this could include the data API, NFT API, token API, right? We even have the abstraction API where you could see it's 8 times faster, right? We support all the major chains, including Sui. And of course, our pricing is very much competitive, right? And we have better service. Right. So with that, I'll end my presentation, and great talking to you all, and let's keep in touch.
Thank you so much, JC. Up next, we have Robert from OtterSec.
Hey everyone, let me see if I can present something. Let's see. Okay, so I don't have too much prepared here. I don't want to waste people's time, but I thought it'd be cool to kind of walk through or talk a little bit about a bug in the Sui staking system, because this is an LSD hackathon. So yeah, I think this was a while back. This is actually patched back in March, but establishes a minimum threshold for the amount that you can stake. There's actually a follow-up patch to this because you could bypass this minimum staking threshold. But I think kind of the TLDR of this is that when you were staking unstaking, you could round down the amount of rewards, and this basically let it so that when you're withdrawing, you could deny people the rewards. Thankfully, the way Sui is designed makes it so that the rewards are completely separate from the principal value. So there's actually no real loss of funds risk here. But it was still like funds adjacent because you couldn't steal people's money, but you could steal the money that they were owed. I think this is a pretty cool bug. I feel like if you're building these LSD protocols, you should probably have, or you should try to get a good understanding of what is actually happening at the low level and actually read these staking subsystems, right? I think if you, I guess if we check the commit history for Sui system or for the staking subsystem, I think it's relatively small actually. Like there's not that many commits. Let me actually quickly pull it up here. Yeah, like if you look at the commits, they're mostly, there's only, I mean, less than a page of commits. Yeah, I think this is a pretty cool bug. The follow-up patch was actually, I don't know if it was here. It might have been somewhere else. But yeah, there was a follow-up patch related to the minimum staked amount. I forgot where they put it actually. Yeah, okay, anyways, yeah, there was a follow-up patch. Yeah, I think this is a pretty cool finding. I can post a link in the chat. Yeah, otherwise, I'm Robert. I help run OtterSec. We do a lot of smart contract auditing, and we try to really understand what's going on at a low level. As part of our review, actually, with Miston, we ended up reviewing the staking subsystems, and this is an example of a bug that we found. So if you're interested in talking about this bug or anything else when it comes to security, feel free to message me on Telegram. Yeah, I think that's pretty much it from my side. I won't waste any more of your time.
Awesome. Thank you so much, Robert. So now we will take a short little break until 1:40 p.m. and then we will resume the pitches. We will have Aftermath, Bucket, DSIG, Canna Labs, and Wisp Swap present soon. So thank you so much. See you all in 4 minutes. Okay, so quick little break, but thank you so much everybody for waiting. So now we will jump right into the second half of the presentations. So first and or maybe not first, but I'd like to reintroduce Kevin from Aftermath, where he will be going over their other submission for this contest. Kevin, feel free to take it away.
All right, yeah. Let's see. Just sharing my screen.
Yep.
Yeah, thanks for the intro. All right. Yep, hello again, everyone. Switching gears a little bit, I'm going to be discussing one of the use cases that we've created behind AFSUI, and that's been in development kind of in secret for a couple weeks / months now. And we've specifically saved its announcement for this very demo. So I'm really excited about this, and let's just dive right in. So for all these presentations and for the past couple weeks regarding the hackathon, we've all been talking about the many benefits of liquid staking tokens. Ranging from increased fungibility to capital efficiency to accessibility to decentralization. But one important thing when designing a liquid staking protocol is you also need, it's also equally important in realizing the general inefficiencies around liquid staking derivatives. So one of the largest drawbacks that accompany LSTs is the fact that you still need to hold onto the native token to pay for gas. In general, this just leads to a worse user experience. If a user wants to hold a liquid staking token, they cannot convert their entire native token into that LSD. They're instead forced to actively manage their balance of the native token versus their balance of the LSD. As LSDs are just supposed to be liquid versions of the underlying staked native token, shouldn't they also be accepted as gas payment too? So with that said, the solution sounds quite simple. Just allow users to pay gas with the liquid staking token. So that's exactly what we've done with our newest feature we are calling dynamic gas. So holders of our LSD will have the ability to pay for gas using AFSWI instead of SWI. Now, although this feature sounds quite simple, it is actually much easier said than done. In fact, it requires building off of many of the core primitives that are only available on top of SWI. So specifically, this requires utilizing two of SWI's novel features. First, we've got sponsored transactions. So this is the ability for a user to pay the gas for another. And then we have programmable transactions. So this is the ability to bundle multiple sub-transactions into one atomic batch transaction. So from a user's perspective, this just means I can perform more actions while only having to click accept transaction once. But what I also really like about this feature is that it ties together all of the products that we have live at Aftermath. So of course it involves AFSWI. The token itself is required as payment, but also the addition of instant unstaking has directly contributed towards the capital efficiency of dynamic gas. And then we also have our smart order router. So this has directly integrated with our AFSWI contracts, and it acts as an abstraction over swapping or staking between SWI and AFSWI. And then finally, we also have our AMM, which has been integrated directly with the smart order router, but then also it's going to house liquidity in the AFSWI to SWI pool. So dynamic gas is truly just a great demonstration of tech that is really only possible on top of SWI. So now let me just jump back into our site so I can show you this in action. So if you guys were paying attention earlier, you would have seen up at the top right, we have this new little icon, the little gas pedal, and then also the SWI coin icon. So I'm going to go ahead and click on this, and then you'll see dynamic gas. And then here I have the option to choose between SWI and AFSWI. And this represents what I personally want the gas to be denominated in. So I'm going to switch from SWI to AFSWI, and then you'll see the icon changes up here. And then I'm also going to show you, I'm on a brand new account, right? I'm holding 0 SWI, but I do have 100 AFSWI. So another one of my accounts have sent the AFSWI to this account. So I can't stake since I'm not holding any SWI, but let me try to perform an unstake operation. Now, normally this wouldn't be allowed because I'm not holding SWI to pay the gas. But here, since I'm holding AFSWI and I have AFSWI selected as the gas denomination, let me try to unstake 50 of my AFSWI. I'm going to choose the unstake instant route and then click unstake. And then you're going to see a couple important changes here. So first, notice that I wanted to unstake 50 AFSWI, but I'm losing 50 plus some change in AFSWI. And then the second most important thing is if we scroll down to the gas fees, we're going to see that this is being sponsored by another transaction, of course, or another account. So let me approve that. And then transaction succeeded. And then if we go back to my account, we'll see now that I'm holding AFSWI and SWI, so the transaction went through. So I just officially performed a transaction on the SWI network without even using SWI as the gas. I paid it using AFSWI. So this feature has quite a large reach, but it's quite simple. So with that, let me just jump right into the Q&A.
Awesome. Thank you so much, Kevin.
Sorry, I jumped ahead of you, Shad. Really, a really good functionality to have. Hackathon to
Alonzo,
fully make sense.
Your mic is a little like delayed.
Oh. Oh, sorry. You hear me now?
We can hear you, but it's like you're speaking in like slow motion.
Okay. Maybe someone else could chat.
Yeah, I'll go ahead then. So that was that was a really cool feature. Is my speed okay? Is
Yeah, that's fine.
great. Yeah, that was really cool. I just wonder. So you mentioned that you use sponsor transaction and programmable transactions to implement the dynamic gas feature. Can you dive a little bit deeper into that? Like who is sponsoring the transaction and so on?
Yep. So at Aftermath, we are the ones sponsoring the transactions. So we have accounts set up that are holding SWI that are there waiting idle for transactions to come through. So a programmable transaction will come through, and then we perform some validation on it, of course, and then we'll choose to either sponsor it or decline it. But then we can choose to sponsor the transaction. We'll pay our SWI up front. We'll sign it, send it back to the user for them to do a second signature and then execute it.
Gotcha. So the way it works is that the user will be paying AF3 because they'll be using that as like the gas fee, but then you will be providing the SWI tokens.
Correct. Yeah. So it works quite well. So I mentioned previously in my last Q&A that our smart order router kind of sits on top of the AMM, but then also the instant unstake operation. So if I want to convert AF3 to SWI, it'll go through the instant unstake. If it's slippagelessly, I should add, because it's a single source liquidity of SWI. It'll go through the instant unstake SWI reserves until there are no more SWI reserves, or if you're trying to unstake more than that. And then afterwards, it'll go through the any kind of profitable AMM route, and then it will use that SWI as payment for us, right? We'll be paying the AF SWI and then using that AF SWI to convert back to SWI.
Okay, very cool.
Can you hear me now?
Yeah,
you're perfect now.
Okay. Sorry about that. So Kevin, really cool. Just want to ask, like, I know this is a liquid staking hackathon, so obviously it makes sense to sort of implement this functionality with AFSWI, but it seems like in general, you could just, implement this with any token. For example, it could be a stable coin. Now, of course, you wouldn't be able to do the thing about like, transforming the stable coin into SWI directly in the way you do it with the liquid staking token, but you could always just like hit an AMM. And for a lot of people, that might actually also be very valuable. So do you guys have plans to extend it to other more general assets, or is it mostly just an AF suite type of feature?
So that's a great thing. So right, I only focus on AF Suite here for the hackathon. But one of the crucial things and why we've plugged it into our smart order router is that any asset that's connected to the router, and so we've connected to the 9 top dexes source of liquidity on SWI. So any asset that's listed there and that has a route into SWI, it doesn't need to be direct. It can be 50 plus hops, and eventually you get into SWI. Any asset that has a route into SWI can be used to pay as gas. So that is going to be the gradual next step for this feature.
Amazing. And it sounds like the programmable transaction block is a really critical building block of being able to do that, right? Especially like if you were able to have like 50 steps.
Yeah, exactly. So yeah, we already get a transaction, which who knows how many transactions are already in it, and then we pad it on with more transactions to fulfill that route back into SWI.
Awesome. Really cool. Thanks.
I will mention, if you guys can interrupt me if you have a question, but one of the ideal use cases with this is plugging it into ZK login and then an on-ramp, right? You can on-ramp native USDC when it's eventually available, or any other USDC that's available, and then use that as gas, and then at no point are you holding SWI even.
Okay, awesome. Thank you so much again, Kevin. So up next, we have Bucket Protocol.
Hello, can you hear me?
Yes, we can hear you, Damien.
share screen. Okay. Can you see my screen now?
Yes, we can see your screen.
Okay, nice. Hello everyone, I'm Damien from Bucket Protocol. Today I'm introducing two big problems for LSD-Fi on Sui network and how we can fix it with Bucket Protocol. I'll also introduce one of the best LSD-Fi strategy, which can boost users' reward up to 50% APR with extremely low cost. So first of all, let's talk about how why LSD market exists and why it matters. First, LSD itself is a yield-bearing token, which is friendly to people that are bullish on this native token. Also, it's friendly enough for lazy investors, right? Second, by staking native token, you get LST, which means you still have liquidity in your hand while earning yield. So users can utilize LST in different markets. This creates liquid staking derivative markets and brings more on-chain activities. So let's take a look at the graph on the right-hand side. Lido's TVL is the highest in DeFi space, and it's over 1/3 of the whole DeFi ecosystem. We haven't even mentioned about the derivative market. So here comes the first problem. The APY on centralized exchange is higher than on-chain protocol. So on the left-hand side is one of the on-chain LST protocol. It offers 4.28% of APY. While on the right-hand side is one of the centralized exchange. It offers 5.3% APY. So as a rational investor, there's no reason for me to stake my Sui on Sui network and get more LST. Right? So here comes a simple strategy for LSD-Fi, which is leveraging LSTs and get higher yield. And it's pretty simple. First step, you stake Sui and get LST. The second step, you deposit LST as collateral and you borrow out the asset, get more LST. By these steps, you earn more yield with your initial fund by leveraging up your fund. But here comes problem 2. The leverage cost is higher than revenue. Let me elaborate more. So borrowing through money market, like lending and borrowing protocols, it takes an unpredictable interest rate depending on the supply and demand of the asset you borrow. So in general, the interest rate is around 6 to 10%. And what's the point to borrow with minimum 6% cost and to generate only 4.3% revenue? So Bucket is here to solve the problem. So what is Bucket Protocol? It's a collateralized deposition, and we offer a user to leverage up their LST with extremely low cost, which they can borrow asset with 0 interest. And they just have to pay a one-time 50 bips borrow fee. You can also take it as a service fee. You can borrow as long as you want, like 1 year, 10 years, 100 years. You just have to pay a one-time 0.5% borrow fee. Okay, so how do we achieve 0 interest? Is that we do not have any lenders, so we don't need to pay lenders interest rate. Second part is that borrowers can only borrow BUCK, which is our native stablecoin. We also have a well-designed liquidation mechanism to make it peg. Unfortunately, there might not be enough time for me to talk more about this, but you can read it in our document and our white paper. So let me show how you can do it. So this is Bucket Protocol's mainnet site. And now we have a testnet link for testing out like AF3. Kevin is very generous. He just sent me like 70 AF3. So I can auto-save borrow, and as you can see. So the auto-save borrow is, we will make them around 180% collateral ratio. And the cost is only 0.5%, which is like this much. Okay, so now we can create Sorry, my laptop is a little lagging. Okay, so we send out 70 AF3 and get 18 buck. Great. And now we can see our position here. You can repay it to get your funds back. Yeah. So that's how we accept AF3 as collateral and also other like Volvo3 and Ha3. Yeah. So user can leverage up their LST with buck. But the question now is there enough liquidity? What is our go-to-market strategy? We already have over 1 mil of buck liquidity on like Aftermath and Kriya DEX. So yeah, user can utilize those liquidity and leverage. And CDP combines LST is the best infra for LSD5. Like Libra Finance itself have 242 mil in just few months. And Raft, another CDP protocol, it's supported by Wintermute, Jump, and GSR, those DeFi experts. They know how important it is. And Prisma Finance is also backed by Curve, Convex, and Flex, those DeFi like protocols. So yeah, that proves how important it is. Now leverage up to 11x with
Hey,
Pocket Protocol.
I think we're almost out of time, so we'd just like to open it up for the judges now. Sorry.
Okay.
Yeah, any questions?
Thank you so much for the presentation. Just a quick question. So, because I think like after the hackathon, there will be like 3 main liquid staking tokens. Do you plan to integrate like all of them into the project? And then, if you plan to integrate them, will like the APY be all the same for like the 3 liquid staking tokens, or the APY will differ on the protocol?
So the APY depends on the exchange rate those LST token provide in their contract. We can directly fetch it from their smart contract. So what we do is we just help users to leverage up like whichever those LST they choose. So they can choose the highest exchange rate token themselves.
Gotcha. Thank you.
Any other questions?
Oh, okay. I'll ask another one. Sorry. I think like just now you flipped the slide like very quickly. What's the collateral assets for Buck?
So now we accept SUI native token and Wormhole USDC and Wormhole ETH, Wormhole USDT. And we are still waiting for AF3 and Volvo3 on mainnet so we can accept it. Now it's on testnet.
Gotcha. Thank you.
Thank you. Okay, I guess that's it.
Cool. Yeah, looks like that's it. All right. Thank you so much to the Bucket team, and thank you to our judges as well.
Thank
Up
you.
next, we have DSIG.
Hello?
Hey, how are you doing, Hanny?
Yeah, I'm doing good. Hi, Cheyenne. How are you?
I'm good. How are you?
Yeah, doing good too.
Good. So yeah, feel free to take it away.
Yeah, okay. Thank you. Okay, on the mic now. Hello, everyone. My name is Henny. I am the co-founder of DSIC, and taking part of the hackathon, we would like to introduce the staking aggregator features. So a little bit about DSIC. I think you guys have known about us before, but like just want to give it a little brief. So we are a multi-sig solution, chain agnostic, empowered by threshold signature scheme with multi-party computation, with an adding technology of zero knowledge and homomorphic encryption. So technically, what we be able to bring to the users would be like one person or like group users or like project co-founders or like DAO councils owners can manage multiple vaults on multiple chains in just one app, and then all of the transaction approved or like request approved, it's completely gatless. So it's very convenient, but also very secure. Okay, so for stacking, why do we want to build this tooling is because we want to empower users to make informed decisions, distributing their stacks across multiple options and bolstering the decentralization within the Sui ecosystem. So the stacking aggregator we build is actually aligning with like the target users of DSIC, which are like individuals and also like group user. So in crypto, we always looking for like we always want to attract like current LPs, new LPs, and no one's like for founders or like for users once they use DSIC, like the multi-sig wallet, they definitely don't want their treasury to sit idle. So that's why we believe with the aggregated view of this features is offering, we will be able to streamline the whole process from analysis to decision making, so that incentivize them. So once they are DSIC user, they be able to like walk into this stacking world with just one click. So what we are doing now is just like we split our features into two phases. First is the thesis, which is the analysis, comprises of the basic table, as you can see here on this side, with all of the basic information any stackers would need to take a look at that. And then the premium table is a more expert scorecard with more details analysis of the validator or the liquidity stacking platform. And on this feature, like on this phase one, there also the sort and sort and the filter capability. So we included here the premium table so that you can see like we have listing out many criteria to evaluate the validator and also the liquidity staking platform. So there are different criteria that we analyze these guys. And then for phase two, we call it Stack Smart, which it will introduce like features to offering the optimal route recommendations, either for maximum return or like for like safety position. It really depends on the taste of the stackers. So they will have options to stack directly with like the validator. They would be able to like consider the optimal route selection, and then they can choose from like highest APY, lowest fee, or like staking platforms that offering LST. And of course, we will input more information about the LST for the staker to consider. And the fee model we plan to have is like nominal fee charge to validator and liquidity staking platform for utilizing our infra, and 5% fee on returns earned by users that use our staking aggregator. And so the segmentation user we are targeting is cautious savers, high return seeker, DeFi enthusiastic, technically anyone who actively participating in crypto. And we be able to like scalable on own chains, and then compatible for single or group users, so like everybody use DSIC be able to know like the staking aggregator on Sui and then participate on it. Okay, so I want to show, this is our demo. That is the stacking option. That is the basic table. They be able to scroll through different option, and yeah, with okay, and that is the search. If they know exactly what is the validator, they already know what they're looking for. Field sort by APY. And then, yeah, sort by fee. Okay. I think my internet is lagging. That's why the demo is a little bit laggy too. Okay. And that is the premium table, like with all of the criteria in depth to evaluate validator and staking platform. Yeah, and we just like create a demo for stay one only for Stake Smart. We're waiting for more staking platform to be available to incorporate those information and then providing the Stake Smart for users. Yeah.
Okay, thank you so much. So I think we're at time now. So now let's move on to the Q&A from our judges.
Thank you for the presentation. Can you elaborate a little bit more on your GTM strategy and what's your user acquisition strategy for the wallet?
The user acquisition for the wallet. So our target users would be, that slide is a little bit like fast. So we technically targeting like project co-founders, DAO owners, treasury managers. Like what we're looking at is like small and mediums project co-founders, and then like honestly what we're trying to do is like right now when it comes to like multi-sig, people always think of like Gnosis, but Gnosis is very hard to scale and it's very costly to approve transactions. So we think we have the competitive advantage. So we're just going to like replace that by saying like whenever it comes to multi-sig, people will think of like DSig. Yeah.
I see.
And then like with like the capability to manage like multiple votes on multiple chains, and not only for group users but only for individuals. Actually, individuals can also use our wallet too. We'll be able to tell them like, hey, with like when you use the our multi-sig, there is an option to stake on Sui with the staking aggregator. So that is how we think we'd be able to bring more LPs onto Sui ecosystem. Yeah.
I see. Can you do you have like existing user stats? Like what's your DAU or like MAU right now? Just curious.
Oh, we are in closed beta right now because
okay.
yeah, we are building like a Crow hack features with either cash flow management, like categorize transaction, being able to bring the monthly report. So once we launch that, we will like expanding user acquisitions.
Okay, gotcha. Thank you.
I have a question. That was pretty cool. And for the aggregator, I saw that you can click into the validator, and there'll be different like comments about those validators. So will the users be providing those comments? Like how do you kind of come up with the suggestions?
Come up with the suggestion. Oh, like the comments, like in the
improvement.
Okay. Like but wait, I'm lost. Like, how do we like connect with the validator to tell them about the analysis? Is that what you're asking?
Yeah. How do you analyze like the performance of the validators?
How to evaluate the performance of the validator. So we evaluate them based on like public information. That is the must. And then what we're trying to do is just like step by step. So we would like do it from like top validators down, and then if they not providing enough like public information, we will try to reach out to them or asking for Sui to help like connect with them so that we can be able to provide the most like in-depth analysis, but like the most correct one, like objective and correct. Yeah.
Thank you.
All right, thank you so much again, Hanny, and our judges. Up next, we have Canna Labs. Canna Labs, let me know how you pronounce it.
Hey guys, can you hear me?
Yes, we can hear you.
Okay. Hi guys, I'm Mohan from Kana Labs. I'm one of the co-development team member. So Kana Labs is already a well-established company. We are available on multiple chains with our DeFi products as well as with our smart wallet and other products on gaming side. Let me just quickly move into our product for the hackathon. So the current problem with in general Web3 is like when a new user enters, then it will be difficult for the user to choose the right platform, and like there are multiple platforms available for staking as well as other investment option. So what we have built is a staking aggregator where we will suggest user the all available protocols with some specific options that user can choose. Also, we already have a cross-chain swap aggregator, which is available on other chains, which can help user to stake from any chain with any token. We have our aggregator on Sui as well, so which helps user to stake. Literally, you can stake any token from any chain. And what we are mainly focusing is the user experience side, uh, like user can with smooth experience, he can smooth staking experience as well as other investment option. For the hackathon, we have built like only for staking, but our future goal is to get this thing to another investment options like yield and other things as well. So as I have said earlier, the solution is like we have built a unified aggregator platform where user can see all protocols, and we just suggest user like how they can invest their native tokens or tokens from other chain. Like I can show you the quick demo. So currently for the testnet, we have Hadel and Olo integrated. We will also be having Aftermath when our mainnet version is released. Okay. So uh, uh, when user enters the amount of Sui token that he needs to stake, we just show him multiple options like what are the staking protocols available, and they can also stake with same in two platforms same time. Like we split their tokens and stake equally based on their suggestion, like based on the selection. So use it. That's all, guys. I'm open for questions now.
Okay, perfect. Thank you so much. Now let's add our judges so they can ask any questions.
Yeah, thank you for the presentation. I know you guys have been, like building a few features for Sui. I'm just wondering, like, what's your like GTM strategy for everything you are currently building on Sui?
Okay, we already have an established user base across all chain. Like I have already said, we are building multiple DeFi products in other chain as well as we. Also, we have a smart wallet, and we are just partnered with multiple Web3 firm as well as Web3 gaming firms. So we can untap the user base of once they start integrating us. We can see users from their site can also be can also use our products. That's all. Do you have any other question?
Thank you.
Thanks.
Yeah, for you also mentioned that you'll be able to use stakes from other chains, and by using like the built-in bridges. So what kind of is that currently live on DevNet, testnet, or anywhere?
No, actually the thing is like aggregator is available, cross-chain swap aggregator is available on mainnet. But when we started the hackathon, we can see that LSD protocol is only available on testnet. That's why currently we have only testnet version of this. But with our mainnet version, like we'll be having cross-chain swap aggregator integrated with it. So user can bridge their tokens and stake in Sui with a single click. We can do that on mainnet. Like on other chains, there is already a cross-chain staking available. But for Sui, as I said, we are just doing moving things to mainnet now.
And which tokens from other chains are you supporting right now?
No, we support any token on any chain. Like we just basically swap their tokens to Sui, and then the tokens get staked in the selected LSD protocols.
Okay, thank you.
Thank you.
Okay, if that's it, then we can move to our final presentation of the day. Thank you so much again. So up next, and last but certainly not least, we have Matthew from WispSwap.
Hey Sajan, can you Alex here on the green room, so he will be the presenter today.
Okay, go ahead. Do you have any slides to share? Okay, cool.
Hey, can you hear me?
Yes, we can hear you.
Yeah, 1 second, please. Oh, sorry.
No worries.
So can you see my screen now?
Yes, we can see it now. Feel free to take it away whenever you're ready.
Yeah, okay. Good afternoon, everyone. My name is Alex, DeFi architect of WispSwap. I'm really happy to present here today for Sui Liquid Staking Hackathon. So let's begin. First, I want to talk about liquid staking challenge that need to be addressed. The first is that each providers issue their own type of RSD, resulting in a lot of fragmented liquidity pools. Next, RSD are not easily tradable and suffers from high fees and delays. And the final problems is RSD protocols technological risks. To address these challenges and to drive Sui liquid staking landscape, we are building a diversified RSD basket, an RSD exchange, and we are expanding the utility for all Sui RSD. Our mission include first, enhancing Sui staking experience through diversification. Second, attracting more stakers and amplifying liquidity for all Sui RSD. And third, empowering the community through governance voting. And lastly, promoting decentralization within Sui. Our staking process is straightforward and user-friendly. When users stake Sui into our platform to mint with Sui, their Sui will be allocated to different RSD providers. As a with Sui holder, you not only earn native staking rewards, but also swap fees from the RSD exchange and enjoy all the utility of with Sui. As for the exchange, we offer cheaper LSD swaps and provides user instant exit from their staking position. Unlike two token pool designs where a significant portion of SUI remain unutilized, our approach ensures that 95% of with SUI TBL continue to earn staking reward. With SUI essentially function as the LP token representing the LSD basket. So here, user can mint with SUI by depositing SUI or by depositing one of our supported LSD. Currently, oh man. Currently, we have onboarded the 3 LSD to the basket, and you can withdraw your Wisui here to receive underlying LSD in a proportion. And regarding utility, in this version, Wisui can be used in our operation market and in our farm. And of course, we have a lot more utilities under development. As for the exchange, you can do LSD swapping. And as for the token, WISP token is utilized as the incentive layer to grow the protocol TBL, and WISP holder can convert their token to vote escrow WISP, serving as the governance and profit sharing token of the protocol. About our go-to-market strategy, our strategy is built on the principles of decentralization and a community-driven mindset. We launch with an ecosystem airdrop targeting for crucial groups in SUI LSDFire ecosystem. Aligning these key groups benefits with swaps benefit encourages a more equitable and collaborative ecosystem. As for strengthening SUI ecosystem, first we focus on onboarding LSD protocols to the basket. And secondly, we employ core incentive pool and cross-marketing activity with our partner protocol to bootstrap swap liquidity and to increase visibility and the adoption of all supported LSD. And lastly, we actively work on additional utility, exploring new use cases for SUI LSD. And for additional utilities, we have recently completed an M&A deal with a game studio, expanding our portfolio to include a wide range of hyper-casual games and casino games. We would love to make this game on-chain, leveraging SUI technology in order to onboard a bigger user base to Web3 and to drive SUI global adoption. And that is the end of my presentation. I'm happy to answer any questions you may have. Oh, I think there's a lot of technical.
Yeah, perfect. Thank you so much. Judges, any questions?
I don't think we got to see a demo of your product in action.
Oh, you did not see my demo? Wow. Let me share my screen again. I think there's some technical.
No, I didn't see it.
Yeah. Sorry about that. Oh. I think I can just. This one. Yeah, can you see my screen now?
Yes, we can.
Yeah, so user can deposit in SUI here. Oh man. Well, I'm very sorry that I forgot the buzzword here. But basically, user can deposit SUI here or deposit LST here to receive our with SUI, and they can withdraw their with SUI here to receive the underlying LST in the basket in proportion. And they can do LST exchange here. And right now, with SUI can be used in our prediction market and in our farm here. Yeah, we actually made a video on all this feature, but right now there's some difficulty with my wallet. Very sorry about that. Do you have any question?
Yeah, any other questions from our judges?
I guess one quick question. So in the very last slide, you had some stuff about gaming. I wonder if you could say a little bit more about that. That sounds interesting.
Yeah, so we want to create more and more utilities and bring more games to SUI LST ecosystem. So as I mentioned in our presentation, right now in our portfolio, we have a lot of casino games and hyper casual games, and one of the exciting game is the grass game right here, which is really interesting to user. One problem I think that making this game on chain can address is the transparency, because we all know that in every casino games, the house always have the edge against the players. However, some providers actually manipulate the result of those games to force the player to lose. So the actual edge of the house is way bigger than we think. Making this game on chain with SUI move could potentially onboard a lot of Web2 players to Web3 and to SUI particularly, I would say.
Cool. Thank you.
Thank you.
Cool. Any more questions? Awesome. Cool. I think that's it. So
yeah, thank you.
Sorry. Thank you again so much for everyone that came here today. Thank you so much to our actual participants. Thank you so much to our 3 judges. And thank you so much for everyone that tuned in live. I'm looking at the timer right now. We were live for almost 2.5 hours. So if you've been here the entire time, please give yourself a round of applause. So just to reiterate, at the very beginning, Henry mentioned that the questionnaires are due tomorrow. So please do not forget about that. And the results for this hackathon will be announced early next week. So once again, thank you so much for everyone who came, presented, watched, cried, bled, sweat, whatever. And we're looking forward to giving you the results of the hackathon soon. Thank you so much. And whoever you all are in the world, hope you have a good rest of your day, morning, night, whatever. Bye-bye.